Previously on this channel, we've explored, can you actually get a mortgage in Costa Rica? We found out the answer is yes, and now we're going to talk about the details of how that actually works. Hi everyone, Sarah Breitlander here with Krain Luxury Real Estate, and today I have Mr. Zach K with me. Thank you, Zach.
Thank you, Sarah,
for joining us. Zach has been on our show before, and recently, like earlier today. We also did a video, but I just wanted to explain whether financing was even possible and how that worked. And now I really want to talk about, if that interests you, about the details. And all of the pros, cons, let's talk about all of it to talk about whether that would be a good option for our clients. So you had said, can we get financing in Costa Rica? Can my clients get financing in Costa Rica?
Yes, definitely.
And just to recap, who can get financing?
So if you are a U.S. citizen, if you are a U.S. green card holder, or if you are a Canadian citizen, you can get financing with us.
Perfect. And that's always the great news. Any of our clients that are working with us, sometimes that's the only option, is to have financing. Sometimes they prefer that option if it exists, just for money management, quite honestly. But let's talk about the first question that I get asked: interest rates and the time period for the loans. Can you elaborate on that?
Yeah, absolutely. So in terms of the structure of the loan, what we offer is a classic 30-year fixed rate mortgage, just like what you would get in the US.
Great.
There really are no differences. This is the classic product that 95% of Americans go to get when they get a mortgage. And our company is the only company in Costa Rica to really offer that product. So we're really proud that we've brought that, super high quality US style mortgage to Costa Rica.
I know that when we first moved here years ago, 13, 14 years now, I remember clients, that's what they would expect. They would expect a call down and we could be like, yeah, you can get a 30-year fixed mortgage. And I was like, that doesn't even remotely exist down here. And the historic financing that we have had down here, super limited, and we call it seller financing. Some of you may have heard me talk about that on the show. That is when, first of all, you have to find a home that you love, and then you have to hope that that homeowner has a seller who doesn't need all of the money from the sale, who's willing to finance.
You have to have a seller who wants to become a lender.
You have to have a seller who wants to become a lender. And you can imagine the percentage of that, right? So I would always say maybe 25% of sellers would even consider it. And then even if they did consider it, we're talking short-term loans. Absolutely. We're talking 12 months, a year, 7 years, maybe. So it's kind of a short-term option. So it still didn't fit for my clients. So I love hearing the interest rates.
We actually have clients who in the past 12 to 36 months, before they found out about our company, purchased a home with seller financing, who are now coming to us to refinance the seller financing.
That's amazing.
They want their seller out of the picture. They have a balloon payment coming up anyways for a big chunk of cash that they owe to the seller. And instead of coming up with that money, they come to us. We give them a 30-year loan, fixed rate on the property. We pay off the seller. They are now out of your hair.
Yeah.
And now you pay off the loan when it suits you.
It's just a blessing that you and your company have this product down here. And if you're not familiar with Zach and his company, please watch part 1 of this interview, because there he kind of explains how he came about to be here, which was literally from falling in love in Costa Rica, trying to buy a house, and somebody telling you that no financing existed.
That's true. But it wasn't Sarah.
It wasn't me. But sometimes you really got to live it to solve the problem.
Yeah, it's true. It's true. And so, Sarah, the other thing that you asked about was interest rates.
Yes.
So right now, our company offers a 30-year fixed rate mortgage starting at 8.25%.
Okay.
For people watching, for comparison purposes, in the US, the average rate on a 30-year fixed is around 6.5%. So a good rule of thumb, because obviously interest rates change over time. So if you're watching this video in 1 or 2 years from now, I don't know where rates will be, but I can bet that they're probably going to be different. A good rule of thumb is that the rates here in Costa Rica will probably be about 1.5% to 2% above what you would see on a 30-year fixed in the United States.
Which is very fair because, before the no financing, there was financing here in Costa Rica a long time ago, like pre-2008.
That's true.
Pre-financial crisis of 2008. There were some banks lending here. And so it could have been done, but we were talking, 11%.
Yep.
So, I mean, it existed, but it really wasn't a great option. Only if that was the only option would you use it. Whereas now with your rates, I feel like clients are saying, I'm using it not because it's the only option, but it's because it's the preferred option for their scenario.
Yeah, I would say for at least half of our clients, they're using financing, not actually even because they need it. They actually had the money to buy the property in cash if they wanted to. They're using this because, for the same reasons you would finance a property in the States, for portfolio optimization, for liquidity, for tax benefits. 100%. They're getting all of those same things here now in Costa Rica at a cost that actually really makes sense. And the one other thing that I would say to kind of put the interest rate in perspective a little bit, when someone thinks about their total carry cost on a property, there's also a couple other things that you need to think about besides interest rate. There's homeowners insurance and property taxes, right? And so while your interest rate here in Costa Rica might be a little higher, those other two things are a lot lower. Right? So
it's my favorite question. What are the property taxes here in Costa Rica? I'm like, are you ready for this?
So if you as a client are thinking about, okay, I'm comparing Florida to Costa Rica to buy a vacation home for my family. If you're looking at Florida, sure, you're going to get a mortgage rate that's about 6.5%.
It's true.
But you're going to have property taxes that are, I think, at least 1% per year. And you're going to have homeowners insurance, which will be required on a mortgage, that in Florida can often be like 0.75% of the property every year. So you're taking 6.5, property taxes are bringing that to 7.5. And then you have homeowners insurance that's taking that to 8.25.
Correct. If you can get homeowners insurance.
Yeah, exactly.
In Florida.
And
property taxes here are 0.25%. By the way, so holding costs are super low.
And so if you're looking at a property in Florida and you're comparing, okay, your interest rate's at 6.5%. Add a percent to get to 7.5 from property taxes at least. And then another 0.75 for homeowners insurance, you're at 8.25%. Guess what else is at 8.25%? The interest rate on a mortgage loan here in Costa Rica. And when you look at the property tax and homeowners insurance cost here, those two things combined are about 0.4% per year is what our clients actually pay today. Because property taxes here are about 1/4 point per year, and homeowners insurance is about 0.15% per year. So when you actually compare the all-in carrying costs, what you're spending a little bit more on interest, you're actually saving on the other side. So it really is kind of dollar for dollar, very similar at the end of the day.
I'm so glad that you did that. I had actually never really thought about it from that perspective. Although I think you're right. And usually, we're not usually competing with outside, so I don't think about that, competing with Florida. A lot of my buyers are from Florida. So as I know, I kind of know the market there just because
I'm from New York, so I think about going to a warm place. So,
no, for sure. But I agree. If you're doing the analysis on where to buy that home, I think that's a great analysis for sure. Now let's talk about, how much can buyers borrow, right? So what's the down payment, loan to value ratio? Let's talk about those things.
So with our company, you're looking at a down payment of at least 25%.
Okay.
And then in terms of how much you can borrow, so we do actually have a minimum. So the minimum to borrow is $150,000. In terms of the maximum, honestly, I would tell you there's not a hard maximum. I would say, realistically, you're probably talking about a $5 million and under loan amount. I think is generally the ballpark. That's going to be pretty reasonable down here.
Perfect. Okay, let's talk about cost, fees. Explain that. And are there any cost or fees that maybe surprise buyers that you kind of want to talk about here?
Yeah, that's a great question. So I think the best number to talk about is what clients should expect in terms of their all-in closing costs to do a transaction. And so the general rule of thumb that we tell our clients when they're purchasing a property with financing in Costa Rica is you should expect closing costs that are going to be in the range of 4 to 5% of the value of the home that you're purchasing. That's the typical range. pretty much every single transaction that we do falls within that range.
Okay.
And to be honest, it's really not that different than if you're doing a cash purchase.
Right.
I think most real estate agents in Costa Rica tell their clients to expect something around 4% if they're buying in cash. And I would tell you that if you're financing, you should expect something in the range of 4 to 5%.
Yeah, I agree. That's exactly what we tell our clients. So, and I like the all in, you know, because I don't want to say something and get really precise and then something fall out of that. So I agree. Thank you for being like upfront with that and just telling them what to expect.
The only number that matters is your cash out the door final number. So that's what you want to have a reasonable expectation for.
For sure.
Yeah. And in terms of like, is there a cost that kind of surprises people? I think the main one that actually surprises people is when you're getting financing, at least the appraisal cost, because a lot of people have gotten a mortgage loan in the States. And in the States, an appraisal is usually a few $100. You know, you can kind of throw a rock and hit a home appraiser in the United States. And so the cost of that is actually fairly low. In Costa Rica, there is a smaller ecosystem of appraisers. And unlike the United States, in Costa Rica, appraisers are legally required to be an architect or engineer. Whereas in the States, anyone can go basically do a course, take a test, and become an appraiser. And so the cost to do one here tends to be a little bit higher. It's not astronomical in the grand scheme of things, but it's usually in the range of, call it like $800 or $900 up to maybe $2,000. Usually the determinant is going to be how far does the appraiser have to travel? Because unlike the States where you have one on every corner, most of the appraisers in Costa Rica are based in San Jose. And so they need to travel to go to wherever the home is.
Fair enough.
There's a cost for that. And then the second determinant will be, you know, how big or complicated the property is. So if you've got an out of the way home that's really big somewhere, you're probably looking at closer to that $2,000. If you're buying, you know, a straightforward condo by the beach, you're probably looking at something in the range of more like $800 to $1,000, or like $1,100, something like that. And so I think people are a little surprised that the appraisal costs that much because they're used to it being so much cheaper in the States, but that's just the reality of the market here.
But that's good to know. That's great to know. And then a little bit about, you know, what are you loaning in? Are you loaning in US dollars, Canadian dollars, colones? Talk about it.
So every loan that we do is always in US dollars. And it doesn't matter if you are from the States or if you're from Canada, we only offer US dollar loans. And I think as a buyer here, for example, even if you're Canadian, it's actually probably still a good thing for you because the reality is properties here transact in dollars.
They do. That's what I was going to say.
You want to have a loan that matches the currency that drives value for your property.
You don't want to have to deal with a foreign exchange rate in the middle of this process. All property is bought and sold here in US dollars. And I always tell my Canadian clients too, when they rent out their home here on Airbnb, they collect those rents in US dollars. My Canadian clients like that as well. Okay, thank you for that.
Cool.
Okay, final question. I saved the hardest for last. What are some of the biggest mistakes or surprises that you've seen buyers make or have in this financing process?
It's a great question.
I told you I was going to save the toughest for last.
You give me tough ones at the end, Sarah. You need to warn me with these questions sometimes.
Please come back. Please don't let this be your last appearance.
I'll still come back. I think if I really had to say, I don't think there's anything like Costa Rica specific.
And I will vouch for Zach and his team that we've done a lot of deals in financing, and I have not had any clients like complain or be like, I'm surprised and shocked, I'm out of here. So I just want to disclose that, but go ahead.
I would say it's not really anything Costa Rica specific. You know, there are a few old adages that any mortgage lender, including one in the States, would tell you that's like common advice that is still sometimes relevant to us. So, you know, for example, once you've been pre-approved, be nice to your credit and don't try to borrow more money right now. Wait until you close on a home to make another big purchase. So, you know, if you're pre-approved, don't go and get a new car loan to go buy a new car. You know, wait to buy the Ferrari until after you close, not before. Because when we get that financial snapshot of the client when they do their pre-approval, we want to keep things as much the same as possible before we get to closing, so you never put your ability to qualify in jeopardy. You know, that's a really common piece of advice in mortgage. And then the one other thing that I would say is with business owners. So sometimes business owners,
That's a significant client base.
which is a lot of people here, sometimes they overestimate how much they can make. And when we underwrite them, they're sometimes a little surprised that they can borrow a little less than they thought.
Okay.
A lot of the times it's because a lot of business owners try to optimize for taxes. And when a lender looks at your taxable income, if you have intentionally reduced your taxable income to your lender, it will look like you make less money. Now, that's a feature of traditional underwriting. Our company actually is in the process right now of rolling out a bank statement loan. So it hasn't launched yet, but it will soon. And that's something that will allow business owners to really just be underwritten only on their cash flow, which I think is going to help address some of that mismatch between expectations and reality that business owners sometimes have. So even if you are doing a little, let's call it tax optimization, in the future, it won't be as much of an issue in terms of your ability to borrow.
Yeah, I love that. I love that. And we have a significant client base. We have professionals and business owners, right? So we have the lawyers and doctors, and then the business owners or people who recently sold their business.
Yeah. And we work with tons of business owners. I'd say that probably defines most people that we work with. Yeah. And most of them are really happy with what they're able to borrow. But here and there, the ones who are really aggressive, let's call it, about tax optimization, sometimes think themselves a little on the other side. Yeah.
Wonderful. Well, thank you so much. I'm really glad we got to dive into the details. Put in the comments below, what questions do you have for Zach? And feel free to reach out to us, and we're happy to walk through this with you and make the introduction so that you can speak to Zach and his team as well. Thank you so much.
Thanks, Sarah.
I really appreciate you being here.
Pleasure.
All right. Thank you. Ciao for now, and
Bye.
Pura Vida, guys.